it does take us to our talk of the tape, the election and stocks, and what the result will mean for this bull run. Let's ask our panel. New York Life's Lauren Goodwin, iCapital's Anastasia Amoroso, and Charles Schwab's Kevin Gordon. They're all with me at Post 9. Lauren, I will start with you first. How you feel about the events? Not so much what you think is going to be the result, but how the market backdrop is no matter what.
Well, for one thing, we're coming off of an economic growth and earnings backdrop that's incredibly resilient, and that provides, I think, a bolster for the bull market and frankly gives whoever the next administration is a bit of time and a bit of leeway to enact their policies. Now, as I think about what are the sectors and areas that are likely to do well regardless of the result, these are paradigm shifts, election-related ideas that have frankly been in place over the last couple of years. We know that trade is going to be a sticking point. We know that energy, data centers, AI are important areas of investment. Investors know what the themes are. I think we're likely to see some relief, actually, knowing the results so we can move on.
Yeah. Maybe the market, certainly the market hopes for a clean result and one that we don't have to wait for many days for, and we shall see. Anastasia, UBS today, equities are attractive regardless of the election result. Piper Sandler reiterates their target of 6,100. In other words, they do too. Do you?
I do. Look, and maybe that's what the market is trying to game out and sort of pre-trading the fact that everybody knows at this point, which is once we get past the election, equities tend to rally no matter who ends up in the White House. They tend to rally on average about 10% in the 12 months after that. We know that volatility picks up into the event, but it subsides thereafter. And we also know that yield should actually continue to decline if the Fed starts cutting interest rates. So I think that's exactly what the markets are positioning for. Look, and I agree with that. We have to go back and look at the events that we had on the economic front today, which is services coming in better than expected, the rate relief that's on the way. The Fed is likely to cut 25 basis points tomorrow. We've got the buyback window, which is basically fully open again, and we're going back into the year-end setup. So, and if you go back to some of the fundamentals, 22 times multiple times $272 on earnings gives you 6,000 on the S&P. So I think that's what everybody's focused on once again.
Kev, do you think the backdrop is positive no matter what the result is? I mean, that's what the prevailing thought, I think, seems to be. Economy strong, as Anastasia said, underscored by yet another positive economic report. Services, we're a service-based economy, so it matters a lot. The Fed's cutting interest rates, the buyback window, pent-up demand for M&A. I could probably find a couple of other things, but what does the backdrop look like to you no matter what happens tonight?
Yeah, well, to the services part, I mean, the bifurcation that you've seen between services and manufacturing, and it was, I think, even emphasized more today and widened a little bit depending on which components you're looking at, specifically for ISM. That's been a theme for this cycle for the past several years. It's taken a really long time for manufacturing to, really get out of its slump and at this point even respond to directionally where, the path of least resistance is for rates, which is lower in terms of the Fed, still cutting rates. I would say from the economic and the market backdrop sense, to the points that were made by Lauren and Anastasia, the backdrop is generally pretty healthy going into this. And in an economic sense, even if you back this up past several months, whether it's the revisions you've got in GDP or GDI, whether it's the GDP report you got, at least the initial read for the third quarter, even some of the labor market data that is not necessarily corroborating what weakness you might have seen in October, all of that is still suggestive of a relatively healthy economy. And that's been consistent with, I would argue, a healthy market backdrop where you've got, close to 75% of S&P 500 members on any given day trading above their 200-day moving average, which I think is a healthy setup heading into this.